After Monday's steep dive, Tesla stock, NASDAQ: TSLA, received a vote of confidence from several Wall Street analysts who reiterated their support for the electric car maker. The new optimistic outlook for Tesla's stock comes amidst the aftermath of a Wall Street Journal stating that the company asked suppliers for refunds to help it reach profitability. In a recently published note, Baird analyst Ben Kallo stated that the recent sell-off of Tesla stock is a huge buying opportunity for investors. Kallo did not provide a direct comment on the WSJ article, though he did state that the market's reaction to the report seems to be overly negative. The analyst reiterated his outperform rating on Tesla stock, keeping a price target of $411 on the company's shares. We hesitated to comment on the WSJ article, but believe the stock reaction is overly negative. We believe contract negotiations are an effort to increase profitability, rather than a sign TSLA is looking to reinforce its balance sheet. Based on the available information, we view this report as a further step in TSLA's progression towards profitability, rather than as a necessity to strengthen the company's balance sheet. We think there are arguments that renegotiations are necessary to sustain TSLA's balance sheet are overly exaggerated. We think it is unlikely TSLA would be asking for concessions from a position of weakness, and think the report could indicate TSLA production is ramping. We are buyers on any weakness, although we expect bears could pile on ahead of the quarter. Close quote. Morgan Stanley analyst Adam Jonas stated that the push and pull of media reports on Tesla has added a layer of risk to evaluating the electric car maker in the short term. Nevertheless, Jonas stated that he believes Tesla is currently trading at fair value, adding that higher average selling prices on the company's vehicles could prove to be the margin boost that Tesla has been waiting on. Consumer Edge Research senior analyst James Albertine has also weighed in on the recent movement of Tesla stock. In a segment on Bloomberg Markets, The Open, Albertine stated that regardless of negative reports about the company, Tesla still appears to be on its way to profitability. Let's take a step back from the unbelievable number of headlines that come out early on this name. Tesla is a company that is well on their way to profitability, we think, predicated on the ramp of the Model 3. The need to raise cash is because there's such great demand for the products that they've created. There's a lot of good things about Tesla that get lost in these discussions between quarterly results, and we're very impressed by their ability to get to 5,000 units per week at the end of June. That was something no one thought was possible as of the first quarter. It is unfortunate that we have to parry all these different issues day in and day out, but we do believe underpinning all of this is an incredible demand for an incredible product. Close quote. Tesla stock took a beating on Monday's trading, at one point going down more than 5% and hitting as low as $293.57 per share. Over the day, and as Tesla released an official statement responding to the Wall Street Journal report, the stock leveled out, ending at $303.20 on Monday. Tesla stock will likely continue to exhibit volatility as the company approaches the date for its Q2 2018 financial results and earnings call, which is set to be held after market close on Wednesday, August 1, 2018. Despite sustained downward pressure from Wall Street, Tesla is continuing its push to ramp Model 3 production and deliveries through the third quarter. With initiatives such as test drive programs for the Model 3, a 5-minute sign and drive system, as well as the possibility of adopting a digital contract when purchasing its cars, Tesla appears incredibly determined to prove that it could be profitable this third quarter.